This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. A cautious open ahead for Asian markets after a volatile Wall Street session. Traders are waiting Nvidia's results later Wednesday and assessing an escalation in the Ukraine war. That conflict entering a dangerous new phase in Kyiv's strike on Russia using US missiles, and President Putin approving an updated nuclear doctrine. Plus, as Korea Zinc works to regain shareholder trust following a scrapped share sale, we hear exclusively from the CEO.
One real mistake was the rights offering. We misread the market. It was perhaps a smart move, but definitely not the wisest move.
Take a look at how we're setting up for the Asian market opens. We have the Nikkei futures right now not doing much at the moment. This, of course, after we saw gains in the previous session. What you're looking at your left side of that screen, though, is the Starship, the world's most powerful rocket right now. We are seeing SpaceX's sixth flight test for the Starship will bring you that landing live. But at the moment, you're seeing right now not a lot of movement in Asian assets. We are awaiting that open. We could go sideways given that on the overnight session. Take a look at how U.S. futures are doing right now, because we saw slight gains in a very volatile session marked by geopolitics. Of course, we just mentioned the ongoing developments around the war in Ukraine. We had tech, though, leading the gains, but earlier investors were pretty much rattled over the Ukraine war, and we had treasuries and bonds rising, Japanese yen, Swiss franc all climbing, and this as we saw those treasury gains being upheld throughout the session. So we had yields down and the dollar also losing ground for a third consecutive session. But really, of course, it's all about also tech and Nvidia earnings coming up, Heidi. This, as options trading now shows that Nvidia's results could actually be the most important catalyst left this year, even more than the Fed's December meeting.
Yeah, and it has been a lot to focus on. But, you know, going back to what we were seeing on our screens at the moment, which, of course, is looking at the Starship landing. And we can also see some of the, I guess, VIPs who are there watching all of this, right? We do see, of course, President-elect Trump as well as Elon Musk there watching as this proceeds with that gargantuan Starship rocket having blasted off from South Texas. This is a key test that is being attended by the President-elect Donald Trump, and SpaceX had earlier scrapped those plans to catch the booster in mid-air with the mechanical arms, instead performing that controlled ocean landing as well. So that flight is still sort of ongoing. Starship set to attempt an ocean landing. That'll be a real test of the heat shield as well and the reusability capabilities of its machinery as well. So the sort of chopsticks booster catch was one of the most anticipated moments of the mission, but it scrapped those plans. It did previously perform that novel maneuver during a previous flight, so the booster was still able to perform a controlled landing in the ocean there. So we saw the President-elect arriving at the viewing location with the SpaceX CEO Elon Musk this afternoon, and we'll be watching to see how this further develops. This is his first at a Starship launch. Let's get more on this test flight. Bloomberg's Bruce Arnhorn joins us now. So, Bruce, what sort of stood out to you, given that there must be some disappointment in terms of the scrapping of that chopsticks maneuver?
Yes, there was a lot of anticipation, clearly, because it was so impressive last time when SpaceX was able to catch the booster as it returned from space. Just to keep in mind, though, just how hard that really was, Elon Musk did say afterwards that the booster did come very close to crashing into the tower at the time. And so that helps, I think, to give us a better understanding why this time the company decided to err on the side of caution and return the booster to water rather than attempt a landing. We don't know what the issue was. Separate from that, though, there have been successes here. The launch itself was successful while in flight. the Starship ignited, relit one of its engines. This was the first time they did that. And now on the return, there will be a test of the modified heat shield on this vehicle. The last time when it returned, it appeared to have some burning that took place. So there'll be a lot of interest in how the modified heat shield holds up this time.
Yeah. We're actually watching that return right now to Earth, as you can see on your screen. But Bruce, this is really a momentous moment for Elon Musk, right? Not only given the achievements of SpaceX, but also given his prominent role in the transition team of Donald Trump?
Yes, of course. Elon Musk was a major supporter of President-elect during the campaign. Since the election, he's been highly involved in various things. He sat in on a call with Ukrainian President Zelensky, for instance, has been involved in discussions on various appointments to the cabinet, other positions, and the two also just spending a lot of time together. So they do seem to enjoy one another's company.
Yes, and we continue to see with that splashdown in the ocean after that 6th test flight for the Starship. And Bruce, I do wonder, so much of, I guess, the premise or the potential for this technology is really the reusability, right? How close are they to being able to deliver that, particularly when it comes to the ultimate goal of it being a lunar carrier?
You're right. Reusability is really important. Let's be clear, SpaceX is way ahead of anybody else when it comes to reusability. SpaceX's Falcon 9 rockets are partially reusable, and they've launched them so frequently it's just routine how often those rockets go up. Starship is just a whole nother level beyond that, much bigger. Gwynne Shotwell, who's the number 2 at SpaceX behind Elon Musk, said just last week that the company's hoping within a few years to be able to launch hundreds of Starships. In order to really do that, they need to be able to reuse the booster and be able to have a quick turnaround. And so that's one reason that they want to be able to have it return to Earth and land on land, whether it's being caught by the so-called chopsticks or touching ground. So the fact that they weren't able to do it this time, as you said earlier, it is a disappointment that it ended up going into the ocean. And we'll have to just see just what the cause for that and just how much of a setback that would be. It could just be that this is temporary. SpaceX has a long history of having tests that don't go completely well, but they make a lot of progress. So we shouldn't read too much into the fact that they weren't able to return it to land this time.
Yeah, accepting compromises was how one SpaceX engineer put it, but we have seen that Starship splashing down in the ocean after its 6th test flight in that controlled crash there. Our Bloomberg reporter Bruce Einhorn there with us. Let's turn to one of our other top stories. And Russia's war in Ukraine has entered a new phase as Kyiv launches its first attack on Russian soil using US long-range missiles. At the same time, President Vladimir Putin has broadened guidelines when it comes to Russia's potential use of nuclear weapons. Bloomberg's Michael Heath joins us for the latest. So is this a bit of sort of well-timed sabre rattling or what's going on?
Yeah, I think there's a lot to that, Heidi, and I think it was really instructive how the US responded to this. They were asked about it, after the markets had been quite jittery over it, and they were almost dismissive of it. The US sort of seems to have fairly good intelligence these days on Russia. It's penetrated the Kremlin quite heavily, it seems, and it was sort of like, well, we've approved this, so of course they're going to do that. So it does feel like sabre rattling, but excuse me. At the same time, because it's nuclear weapons, because of the destructive capacity, everyone's always going to feel nervous when the second biggest nuclear power has starts commenting on this and is engaged in a war and starts updating its program. But even the idea of of sort of seeing that a conventional attack backed by a nuclear country would be cause for a nuclear response. It's not the most logical, combination in many respects. So I think very much it's a case of Russia had to do something, and nuclear is always its best option there.
And is that sort of addressing this temptation to escalate? And I suppose the idea of this much support from the US for Kyiv is really running out as we head into next year.
Yeah, look, I mean, the reality is that the US has been very slow with Ukraine. I mean, it sort of had to be dragged to all of these positions, and there's always the talk of, oh, Russia will do this or Russia will do that, and Russia does nothing. And the reason for that is that the people who run Russia now, President Vladimir Putin, the KGB coterie who are around him, these are people who live, very, very good lives these days, and it's not something they're going to jeopardise. It's one thing to send the army in there. It's another thing to sort of stoke imperial ambitions and that sort of thing, but the idea that they would put the world's future at stake or their own futures at stake more than anything is sort of highly unlikely. The interesting thing too is President Biden has been around a long time. Obviously, he sat through the Soviet era and that sort of thing, so he's aware, very clearly aware of Russia's sort of status with nuclear weapons. I suspect President Trump and Elon Musk might be more impressed by hearing these sort of updated doctrines, but for a sort of world-weary person like Biden, I think it's fairly understood. And we've seen Russia rattle its nuclear sabre whenever Ukraine has gone to a next level, and absolutely nothing has happened. And I'm certain that's the case again now.
Well, President Biden, in fact, didn't even mention the escalation around Ukraine when he left the G20, a meeting that really was perceived as pretty disorganized.
Yes. I mean, there was obviously a lot to talk about and a lot going on, but there were some frustrations about how how it all sort of unfolded at various stages in Brazil there. In South America, and so. It perhaps didn't go off as easily as it might have, but these are very complex meetings to hold as well. So I think we have to have a bit of sympathy for the host there in trying to do that. But the other thing too is that, in a sense, you've got President Biden, who's sort of a bit of a lame duck at this stage, and everyone's really waiting on Trump. So anything taken now is sort of it's sort of really in a holding pattern, I think, anyway, in terms of any decisions or any movements there. And you can sort of understand why Brazil was very keen to talk about climate and these sort of issues. Ones that, before Trump, they sort of would like to get nailed down.
We're also hearing that, after 2 visits from Modi to Russia, we're now hearing that President Putin is planning to visit India for the first time since the start of the invasion. I mean, it doesn't feel like perhaps Washington's efforts to isolate Russia are going very well at this point.
No, I mean, look, India's a special case. They've had a really long history with Russia, with the Soviet Union in particular, and there was the classic case in 1970 when there was a very serious standoff with Pakistan, and the Soviet Union sent warships in to help protect India, and India's never forgotten that. So there's a real legacy there. But the other thing is, India's an emerging superpower. I mean, this is a massive nation. There's such incredible prospects about it, and they're not going to hem themselves in with Western democracies. I mean, from the Western point of view, it's obviously really disappointing that you see India, engaging with Vladimir Putin and with Russia, considering what he's doing in Ukraine. And Indians are, actually pretty knowledgeable about all of this sort of stuff as well. But India gets cheap oil from Russia. India gets military supplies from Russia. I mean, it's basically in their national interest to keep these channels open. But yeah, it does say that the Biden administration, I think, is going to have a bit of a legacy of failure in a lot of these areas, unfortunately.
Bloomberg's Michael Heath there with the latest. We do have more ahead on the Asia trade. This is Bloomberg.
The market has looked past a lot of the geopolitical risks.
A lot of these geopolitical headlines tend to be short-lived, and we would even argue offer up a pretty good entry point here.
As of now, at least, the reaction from markets is fairly modest.
You're seeing a bit of a shift here, but certainly nothing that's overly notable here, given the prospects for heightened geopolitical risk.
Geopolitics and politics is far more important for your strategic asset allocation than it is for tactical. Oftentimes, the way to actually trade politics and geopolitics is to fade the risks.
They're probably the biggest outstanding tail risk that is out there, but from an underwriting perspective, when we're thinking about investing, that's not our base case. It's not our core outlook.
Markets are still focused on the fundamentals unless we see a more meaningful escalation and or a more meaningful move in energy prices.
Bloomberg TV guests weighing in on the escalation of Russia's war in Ukraine and its impact on the markets. Let's get some more analysis now with Terri Spath, who's the founder and CIO of Zuma Wealth. And we sort of keep coming back to geopolitical risk, which for the most part, markets, even energy markets when it comes to the Middle East, have kind of mostly remained sanguine to. Do these sort of escalations, though, create more of a risk that perhaps have been overly discounted by investors?
Yeah, hi, great to see you guys. And obviously, this is a big story, what's going on with Russia and Ukraine and the geopolitical risks that go on around the world all the time. And I don't mean to minimize them in the slightest, I don't. But I think where markets have really been focused and what's really sort of moving earnings and potential for earnings is what's going on with fiscal trade and how that's impacting the relationships between different countries, and that's what's going to have the bigger kind of macro impact on various companies. And so I don't think that geopolitical tensions are moving the markets the way you might expect, because the headlines are quite scary when you read them.
You're heavily focused on the exuberance when it comes to tech, right? And we were just covering the SpaceX launch, where, of course, you see Elon Musk and President-elect Trump there, and Musk has been sort of such a constant by his side over the past few months. Does this make a meaningful difference for tech investors? And you know, also, you're obviously looking at the implications from NVIDIA's numbers too.
Right. Yeah, I think that's a lot of the stories that are occupying investor minds right now. I mean, I think under a Trump administration and a red sweep, it's really being interpreted, and I think it's probably rightly so. It's a Cinderella story for technology companies, as well as a lot of types of industries, but tech in particular, with really defanging regulation, like you mentioned. Elon Musk having a seat at the table, more than a seat at the table. I think he's got an office in the White House that's coming his way. So we really got a golden age for big technology companies. That's on top of what's already been aggressive CapEx spending. That's been a big driver. AI, artificial intelligence, with no signs of slowing down. And that's really what's pushing the enthusiasm for big tech right now. As you mentioned, NVIDIA's got their earnings coming out tomorrow. The demand for its chips, in its own CEO's words, has been quote unquote insane. I think that really drives earnings. It certainly drives enthusiasm for the stock. There's not a lot of alternatives for their chips. And so, it's really hard to step in front of that freight train that's driving the enthusiasm for big tech right now, and NVIDIA in particular.
And yet, how much of a dampener could potential tariffs in the Trump administration be, especially when we're talking about more friction in the tech sector around these advanced chips?
Right. I do think you're bringing up kind of one of the two big risks to tech stocks, in big tech stocks right now. One is valuations, which don't matter until they do matter, and tariffs, which is a big, I think, risk potentially for the tech industry. The results of the presidential and the congressional elections have really focused us, as well as other investors, impact of higher tariffs. There's a real likelihood that that's going to happen. Ratcheting up of tariffs was a major plank for the Trump administration. We fully expect it to happen. But when we put our pen to paper and look at what's the economic impact for a lot of companies of higher tariffs, we're taught that higher tariffs mean higher inflation, and that's going to cause some problems and cause infrastructure problems for tech companies that can't get their chips. What has happened in the past is that we see a reallocation of trade, an increase of trade with other companies. We don't necessarily see higher prices in the form of inflation. That gets made up for, higher prices get made up for with domestic production, other importers, a lot of absorption of those costs by other parts of the supply chain. And so to kind of circle back, yes, tariffs are a risk to big tech and to NVIDIA, but we don't see that as a problem in our thesis for being bullish on big tech and being bullish on companies like NVIDIA, because those trade disruptions in the past have really surprisingly worked themselves out pretty well. And we do think that that can happen again in the future. So we continue to be constructive on that.
What about beyond tech, though? Because the issue with tariffs and higher inflation is that the Fed might not be able to ease as much as markets have been expecting so far.
Right. I mean, we don't want to be dismissive of inflation and tariffs and their connection to inflation. But what we've observed in the past is that it hasn't really, at the macro level, caused much as big of a problem as we might have expected. Where we do think that there's a real pressure that's creating inflation is the debt and the deficit problem that we have here in the U.S. Deficits are by definition inflationary, and they exist in a big way right now. So we think over the medium and longer term, that is going to be creating inflation. That's a little bit of a problem, but we don't see major inflationary pressures being a problem for companies going forward. We're going to have the Fed continuing to cut interest rates. Corporate earnings look to be strong going forward, and we've got a real pro-growth backdrop for U.S. companies and company earnings. And so while we are cognizant of the risks of tariffs, we're cognizant of the risk of inflation, those are, and geopolitical tensions, as we've touched on as well, those are sort of well digested risks right now. And we still think that the stronger fundamentals are going to drive stock prices from now through the end of the year.
Terri Spath, always good to have you with us, founder and CIO at Zuma Wealth. We have more ahead on the Asia trade. This is Bloomberg. And Haidi, we're getting more details on what the administration of Donald Trump, his second administration now, Trump 2.0, will actually look like. President-elect Trump now nominating celebrity Dr. Oz to actually lead the Centers for Medicare and Medicaid Services. This is an agency that manages $1.7 trillion in annual spending for federal programs, ensuring more than a third of Americans. A very unconventional pick. More on the conventional line, we're getting also Donald Trump tapping Cantor Fitzgerald, CEO Howard Lutnick to lead the Commerce Department. Of course, we had seen a very public battle when it came to perhaps the position of Treasury Secretary. We still are awaiting who will lead that post.
Yeah, something of a sort of merry-go-round, right? Taking the time to, choose the person that's going to hold probably the most important job when it comes to global economics and finance. And that race seems to be taking a little bit more of a longer time. And at the moment, we're seeing markets kind of viewing that one candidate is certainly the favourite, that they're looking at Kevin Walsh, who's a former Federal Reserve Board member, well known to Wall Street. And that's really the market's pick in terms of being a seasoned candidate to lead the US Treasuries. We saw Treasuries rallying on the hope that he gets a job, according to strategists watching the situation. But of course, he's also looking at a number of other potential candidates, including Scott Bessent, Mark Rowan as well, the Tennessee Senator Bill Hagerty, also apparently in the mix. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're shaping up. We're just about 30 minutes into the start of this staggered start to trading. We're seeing Aussie shares really a little bit on the back foot after gains in the previous session. We had that kind of regional rebound starting to fade a bit, particularly when it comes to one of the first markets to come online, which is, of course, here in Australia. Off by about 0.25%. We have seen the Australian bonds rising, treasuries gaining for a second day, that safe haven asset demand for treasuries, for sovereign bonds after that escalation in Russia's war against Ukraine. Still sort of playing out. We're seeing that catch up from Aussie bonds there as well. Elsewhere around the region, it's looking like a pretty muted start to this midweek session. Singapore Nikkei futures looking a little bit flat to the downside. So much caution ahead of Nvidia's numbers as well. So that sluggish start is perhaps not unexpected, given that we have a mix of big tech earnings, the question mark over heightened geopolitical risks as well. Of course, Nvidia, currently the world's most valuable company. We're also seeing S&P futures looking just modestly positive. Bitcoin, though, continuing to extend that rally, Shery.
And Heidi, these are some of the other top corporate stories that we're following at the moment. CATL is in talks to establish battery recycling operations in Europe as the company prepares to start cell production in Hungary. The Chinese company says it's also scouting for local raw material suppliers and aims to hire 2,000 to 3,000 people. Its regional operations chief says the aim is for a closed loop in Hungary from manufacturing to recycling. Bloomberg has learned that the incoming Trump administration is looking to slash fuel efficiency requirements for new cars and light trucks. It's part of plans to unwind Biden policies the president-elect has blasted as an EV mandate. Sources say they are also targeting related EPA standards on tailpipe emissions. XPeng's U.S.-listed shares fell sharply even after the automaker reported a narrower third-quarter net loss. That's as investors weighed concerns about the company's lower selling prices and increased competition. XPeng says net loss stood at $211 million, while revenue increased to nearly $1.4 billion. Meanwhile, XPeng's rival NIO is reporting earnings next. Bloomberg Intelligence says sales were likely flat from a year ago as it awaits greater contribution from its mass-market SUV. For more on the landscape for electric vehicles, let's bring in Tu Lee, Managing Director at Sino Auto Insights. Tu, good to have you with us. So give us your sort of explanation to what's happening with the market reaction to XPeng's results, and really what can we expect from NIO as well?
So, NIO and XPeng recently launched two new vehicles in the mass market, and they only launched them in September. So I wasn't expecting to see many sales increases in the month in this quarter, but we saw that XPeng is expecting a really, really big fourth quarter, 50% year-over-year growth. And I think that's going to be largely driven by the Mona. And I could see NIO also doing something similar with the Andro. I've heard very good things about that vehicle, and some of the reviews that have already come out have given it really good merits or good review as well. So I still see NIO not having a super strong quarter, but trending towards that direction in Q4.
You sound a bit more optimistic when it comes to these names. How much are you factoring in the potential of more geopolitical challenges for these Chinese companies?
I think that's a major factor. But if we look at the U.S. and the EU, those tariffs have already been called out. And we're still seeing strength in sales in China. So I think short term, we can have XPeng and NIO can still rely on the China market for a bit of that growth. But longer term, XPeng, I think, is in 40 markets. NIO is going to try to be in 25 by the end of next year, I believe. So they're going to continue to rely more and more on the international market. But for all intents and purposes, they're still pretty much a China-focused EV makers. So.
And it's interesting, perhaps that's also the model that you can kind of take away from the BYD success story, right? They don't sell cars in the US, but that leadership, can that be replicated by the other Chinese names?
It's going to be difficult just because BYD has so much scale. They mitigate some of that risk because their batteries, they also sell to third parties, people like Tesla and Ford. And so it's a little bit of comparing apples to oranges, but congratulations to BYD. They hit 10 million vehicles production on the 18th. And so 7 million of those vehicles were produced over the last 3 years. So I don't know if we can compare XPeng and NIO, who are truly startups in the EV space, to a BYD who just seems to be a juggernaut.
And it's interesting, going back to Shery's point about just the political pressures we've already seen from the EU, from the US, and potentially worsened by further trade tensions between a Trump administration and how it deals with the China's market access. Do you think the climate goals come into this? Because as you've pointed out, the quickest way for some of these economies to get to those climate goals is by accepting, the cheapness of these Chinese vehicles.
I think that's a terrific question. I think that the United States, at least in the next 4 years, will probably back away from those aggressive goals. The Trump administration has already started talking about rolling back EPA, increased requirements on the EPA. but we see Governor Gavin Newsom also trying to fight that. And California can be looked at as a country in and of itself, because most automakers that build for California aren't going to build something different for the rest of the United States. So some of that's going to be caught up in the legal system, but it's going to be a pretty significant fight to keep what the Biden administration has put into place, at least through the IRA. And with Europe, the Chinese, they rely so heavily, the European automakers, on the China market, that they seem to be a bit more flexible with some of their priorities and their policies.
The issue for these Chinese EV makers, though, is not just the fact that they're not able to really expand overseas, but also that domestically they're competing with each other, right? How big of a challenge is that, trying to get the same pie and the really surging competition among these Chinese names themselves?
It is exhausting, isn't it? Trying to keep up with all of the competition that's happening in China. He Xiaopeng, during the earnings call, he said that he foresees some weaker companies whittling away in the next couple of years. And so that indicates to me that he doesn't see a let up in the price war through 2025. And we're already starting to see cracks in more and more companies like Neta, who's a Chinese EV company in the mass market. They're struggling a bit. But, it creates opportunities, hopefully, for the stronger players to take more share over the next 18, 20 months. And I think building that foundation in China is really going to let them create more flexibility for the foreign markets.
We're also sort of trying to work out what the next 4 years or the next sort of 2 years before midterms, I guess, depending how you view it, is going to look like in terms of the regulatory and policy landscape, right? On the one hand, we're hearing that President-elect Trump wants to kill the tax credits for EVs, and we've seen estimates projecting that we'll kind of see a plunge of almost 30% of EV vehicle demand in the US following that. On the other hand, we're also hearing that he wants the Department of Transport to make, easier sort of regulations around self-driving cars as a priority. So what's your kind of best case modelling of what that landscape will look like for self-driving for EVs in the US?
I think that you can look at the China market as the canary in the coal mine. PHEV sales in the China market have increased almost 100% year over year in 2024. And I think in order to mitigate some of that risk from the Trump administration, because the Detroit 3 had already been investing in plug-in hybrid technology and ready to launch vehicles, the plug-in hybrids, in the United States over the next 18, 20 months. And so I think they're going to lean more heavily into that. They're still going to build BEVs, but I think they're going to dial that down, especially with the $7,500 tariffs likely, or tariff subsidies likely getting taken away. But it's clear that the next 4 years, unless Trump and Elon have a falling out, it's going to be very, very favorable towards Tesla.
It doesn't sound like it.
Li, who's a managing director at Sino Auto Insights. Really great to have you with us. Let's get you a quick look at how we're seeing this sort of treasury and sovereign bond effect from that haven demand that we saw overnight. We are continuing to see Australian bonds catching up as treasuries gain for a second day. That was really in large part fueled by that demand in havens after the escalation in Russia's war against Ukraine. We saw the move in treasuries after Ukraine carried out its first strike within Russian territory with these Western-supplied missiles. President Putin there also approving an updated nuclear arms doctrine. But interestingly, the one thing that was sort of left off that haven demand rally was one key participant, which was the US dollar. So it's quite interesting that perhaps other catalysts at the moment are overwhelming the US dollar, namely the direction of yields, the expectations for interest rates more broadly, and perhaps the fiscal concerns over the implications of a Trump 2.0 impact on tax cuts, on the tariffs implications, as well as the implications of mass deportations that have been promised as well. So we've seen the dollar slipping at the moment. We're seeing the Aussie continue to hang on to those gains as the Aussie as well as the Loonie led those advances within G10 overnight. More ahead on the Asia trade. This is Bloomberg.
Take a look at how commodities are trading at the moment. We're following oil prices, crude gaining 0.3%. And this, of course, after we saw that industry report signaling a build in U.S. crude inventories. This is ahead of official figures, though. We're also following geopolitical tensions rising around the Ukraine war. The Energy Information Administration also scheduled to release their data on inventories, refining and fuel demand later on Wednesday. But iron ore also looking steady in Singapore. We saw the dip down 0.2%. Earlier this week, we had some gains for iron ore, signs of robust Chinese steel output in the short term, but right now we are seeing it pretty steady, with copper also gaining 0.2%. Heidi.
Well, the CEO of the world's largest zinc smelter, Korea Zinc, says he's working hard to regain shareholders' trust after being forced to scrap a $1.8 billion share sale last week. Our Chief North Asia correspondent Stephen Engel spoke exclusively with Yun B, Choi about the steps that he's taking to revive the firm that's really been seen, Steve, as being critical for limiting China's dominance in metals, in renewable energy. So, Steve, you know, what was sort of the most compelling part of this conversation?
Well, the most compelling is the backstory to all of this. Of course, Korea Zinc is the biggest zinc producer outside of China, and there's that geopolitical rivalry. So that has global implications, not just a Korea boardroom battle here because of the position that Korea Zinc has. And there you're seeing Yun Choi. He is the grandson of one of the co-founders, and it's the two co-founding families that are feuding right now. And what makes this corporate battle different than past ones, Korea is no stranger to hostile takeover attempts, but this one has the backing of private equity, global private equity. You have the Yun-Beom Group, which is the largest shareholder, the rival family, if you will, within the Korea Zinc chaebol, teaming up with MBK Partners to make that unsolicited bid for Korea Zinc 2 months ago. And then Yun Choi, who is trying to rebuff that offer, is teaming up with Bain Capital. Now, I began a very lengthy interview. It lasted more than 2 hours here in the headquarters in Seoul yesterday. I began by asking him what mistakes he has made leading up to where we are right now, just a month away potentially from a critical EGM that will likely decide the management fate and ownership fate of Korea Zinc. Here is my first chunk of many with Yun Choi.
That's a tough question. One real mistake was the rights offering. Yeah, we misread the market. It was perhaps a smart move, but definitely not the wisest move. It was a tactical error on our part, not reading the market, not expecting the reaction of the market. People who complained, rightly so, were the people who were our current shareholders whose share prices dropped upon our announcement, and perhaps the beneficiaries of the rights offering were yet existent. I mean, they were to be our future shareholders. So we definitely miscalculated that. We definitely put the cart before the horse, as they say.
Are there any scenarios that are forthcoming that would, in your mind, force you to step down?
If we feel that there is somebody who is better fit to run this company, I will be happy to step down. It will be my duty to step down. It is not, especially for the last 2 months, it has not been the most enjoyable experience running this company. But it is a duty. It is a duty that I enjoy. I do not serve as the CEO of this company because I own a small percent of this company. I believe I'm a CEO of this company because I'm the best person to run it, and I have immersed myself in this job less than 20 years. For some people, that might be long, that might be short, but it was a total immersion, and that is true not only for myself, but all the core members of this business. And one really, truly needs to be in a state of total immersion in order to run the company like Korea Zinc as we do.
I have to emphasize how important this is in corporate Korea, and all the chaebol are watching this to see if this is a precursor for further attacks. If the Yun-Beom and MBK attack, if you want to call it that, is successful. So again, the exclusive interview with Yoon Che, a further conversation which we'll hear in the next hour is just the ramifications if there is a management change and what that would mean with a private equity firm which could potentially sell it to outside influences, could essentially change the way the chaebol in Korea are run. So in the next hour, we'll also hear about the geopolitical considerations and ramifications of such a scenario. But again, still, Yoon Choi is confident that he will win this battle for control of Korea Zinc.
Yeah, our Chief North Asia correspondent Stephen Engel there in Seoul, and we look forward to that very candid conversation and the rest of that narrative. We have more ahead on the Asia Trade. This is Bloomberg. We have breaking news out of Japan. We are getting the export numbers, and we're seeing that they actually grew 3.1% year-on-year for the month of October, avoiding a contraction after already 10 months of gains. Imports year-on-year also gaining 0.4% instead of a contraction, and we're seeing those numbers surprise to the upside. And this, of course, has led to a trade deficit of $461 billion, and this is a little bit larger than what economists had expected. Still, we continue to watch where those exports are going, including to China, a gain of 1.5%. To the U.S., though, falling more than 6% for the month of October. We'll continue to watch these numbers because we have seen the pace of exports again slowing down in Japan, and that really weighing on overall results when it came to Japan's GDP for the last quarter, Haidi. But right now we saw exports surprising to the upside with gains of more than 3% for October.
Shery, let's get to Hong Kong now, with the former Hong Kong media mogul Jimmy Lai will take the stand today to defend himself against national security charges in a case that's being closely watched in Beijing and across the West. Lai hasn't spoken publicly in nearly 4 years after being detained under the China-imposed laws. Our China correspondent Min Min Lo joins us now from outside the West Kowloon Magistrates Court. Min Min, what are we expecting to see and hear today?
Yeah, it's once again another dreary, cold and rainy day. And once again, it's like what happened yesterday as well. Long lines of people queuing by the side of this building, wrapping around the building, heavy police presence here as well, with wedge barriers being set up, cordon set up as well, people waiting to enter the courtroom to be part of the public gallery to watch his trial. And this is very highly anticipated because, as you said, it's the first time we're about to hear him speak in court in about 4 years, ever since he was put into solitary confinement in December of 2020. The only 2 words we've heard him speak in court so far are not guilty. He's been charged with 2 counts of collusion with foreign forces and 1 count of publishing seditious material. This is related to his role as the founder of Apple Daily, which is this pro-democracy newspaper that was forced to shut down in 2021. And the court is expected to hear him present his evidence for the next maybe 3 to 4 weeks, and this case is expected to stretch possibly into next year.
What are we seeing in terms of international reaction to these sentences?
Yeah, this is certainly not going to fly under the radar of the international community because already we are getting a lot of media attention, a lot of comments from the international community. The British Prime Minister on Monday had raised the issue of Jimmy Lai's deteriorating health with President Xi on the sidelines of a G20 summit in Brazil. And you have President-elect Donald Trump pledging to try to secure Jimmy Lai's release. The European Parliament calling for an unconditional and immediate release of Jimmy Lai. But of course, Beijing Beijing is not likely to bow to international pressure. It has responded to some of the Western criticisms to the sentencing of the 45 pro-democracy activists yesterday, saying that these criticisms are trampling on the spirit of the rule. And it's also saying and urging all these countries not to meddle in China's internal affairs. And it's also some of the conditions around this trial that is drawing criticism, because Jimmy Lai is not granted a jury trial. He's tried under 3 judges handpicked by the chief executive. He also wasn't allowed to hire a lawyer of his choice. Top British lawyer Timothy Owen was barred from representing him after Beijing published the first interpretation of the national security law, granting the power to bar such lawyers to the chief executive and the powerful National Security Committee.
Our China correspondent Min Lo there joining us from Hong Kong. And these are some of the other geopolitical stories that we're following. The UN nuclear watchdog says Iran has agreed to stop enriching uranium to close to the levels needed for weapons. IAEA monitors say Iran's engineers are taking the first steps needed to cap output of 60% enriched fuel. It comes after talks in Tehran this month between the agency's director general and Iran's president. Bloomberg has learned that the Biden administration is beginning to refer to Edmundo Gonzalez as Venezuela's president-elect. A senior administration official says Secretary of State Antony Blinken told partners about the decision at the G20 summit. The move is designed to increase pressure on Nicolás Maduro, who says he won the July election without providing proof. We have the market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with geopolitics front and center as Haidi. We continue to see the war in Ukraine escalating, not to mention that the G20 ended with a final communique that not everyone was really happy with.
Yeah, some sense of disarray, right? Be it you talk about geopolitics or the sort of broader picture when it comes to climate. But Shery, you mentioned that sort of haven demand that we saw overnight. Very interesting that it didn't actually seem to affect the dollar. So it feels like perhaps these implications for the Fed, these fears about reinflation, might be the stronger driver for the greenback at this point.
Yeah, we had treasuries gaining, bonds gaining, the Japanese yen gaining, the Swiss franc gaining. But at the same time, those moves weren't really sustained. We're actually seeing the Japanese yen pretty steady at the moment. And you can see right there at that 154 level headed towards 155. And this, of course, as we continue to see weakness in the Japanese currency, we're seeing the Nikkei gaining about 0.2% at the open. We're also reacting to some news that we had over exports gaining more than 3% in the month of October, year on year. That beat economists' estimates. We had seen a contraction for the first time in 10 months in the previous month of September. Take a look at how the Kospi is coming online as well. We have been talking about the U.S. dollar pretty steady and really losing ground for 3 consecutive sessions. And that's led to these Asian currencies also getting a little bit of a boost. So the Korean won right now continues to gain ground against the U.S. dollar and is seeing its longest run of gains against the greenback since the summer back in August. The Kospi coming online up 0.2%, Heidi.
Yeah, really interesting to see that sort of, even if it was sort of not a long-lasting outperformance, but we did see the likes of the Aussie as well as the Loonie leading those gains in the early part of the morning session across G10. So some of these concerns clearly affecting the greenback. But take a look at how we're trading. We're just about an hour into the cash session here in Sydney, off by about 0.25%. Clearly, there's quite a bit of market nervousness as we get to, one big earnings report in particular. We'll get a little bit more on NVIDIA in just a moment. But that caution is sort of permeating broader markets. We're seeing tech, for example, off by just about 1%, one of the laggards here in Sydney. Industrials also softer, as well as consumer discretionary stocks off by about 0.8% in terms of the biggest losers too. The Aussie dollar holding at 65.42 at this point. And as we mentioned, that move in Treasury is gaining on the haven asset demand story after Ukraine hit Russian territory with US missiles for the first time. So really seen as a means meaningful escalation. And Shery, of course, we had the saber rattling in terms of the updated nuclear doctrine from Vladimir Putin as well. A quick word as we end on the outlook for energy. We're seeing these expectations that the glut is really set to thwart Trump 2.0's call to continue fracking. But at the moment, we're seeing crude maintaining pretty steady levels at the moment. The most recent industry report showing a build-up in US crude levels are coming ahead of some official data from the government that we're looking at too. But Shery, when it comes to these markets, it is really about one company, the most valuable company, in fact.
NVIDIA's earnings, of course, coming up later in the week, and it shows we're looking at options trading showing that this might be like the biggest catalyst left this year, even more than the December Fed meeting. And of course, this will give us really an indication of where this demand for artificial intelligence is going, right? And our next guest sees growing risks associated, though, with the AI trade here across Asia. Let's bring in Vicki, Asian Equities Portfolio Manager at Robeco. Vicki, good to have you with us. So what's the problem right now when it comes to tech, when it comes to AI in Asia? Are we too stretched?
I think at this point in the market, it's very important to remember that it's all about earnings expectations and how much these companies can deliver. So I think going into next year, we have gone through 2 amazing years of AI developments. It is very exciting. We're tech enthusiasts, and we believe that Asian supply chain is very important. But having said that, expectations are very few at this moment. So increasingly, the market are getting very nervous because everything has to end up in the money. So everything has to be backed by earnings and backed by more capex, furthermore capex even from the downstream companies. And the question is whether there's too much expectation at this moment. And we think that increasingly this trade is becoming probably a little bit more risky on the margin.
Yeah, price to perfection, you could say. Also, is the concern about tariffs and a Trump 2.0 era an issue here?
I think in technology sector, we're probably looking at further restrictions of technology by Trump for China. So that remains to be a risk that somewhere is in the shadow, but still not very clear just yet. But obviously, if that becomes a reality, that would further put pressure on this part of the market. So if we look around, we barely see any value left for investors on the market right now for these stocks. So any negative news or any hints of negative development could put further strain on the sector. So I think it's very, on one side, the growth is very exciting. On the other side, a lot has been priced in. So on the margin, it's probably not as interesting.
Is there still value and interesting, opportunities when it comes to China? Because we've seen this kind of failure to be able to sustain the post-stimulus enthusiasm, right? Could more announcements potentially feed into a more longer-term virtuous cycle, if you will, for Chinese assets?
That's an excellent question. I think with everybody looking at China right now, for us, the focus is very much on the bottom up and looking for those companies that can deliver improving return on equity and improving earnings against low expectations. So I think I emphasize on low expectations because I think we're not at a stage where China is going to shoot straight up for the moon at this moment. So there are structural issues. Property market needs, all these issues needs to be addressed. So further policy actions and further improvement on outlook definitely still is needed for this market, and the outlook is not going to improve itself without further policy action. So from that perspective, only playing policy means that you'd be always chasing after what has been reflected in the market. So from our perspective, we really look for those bottom-up ideas in China where expectations are reasonably low, interests are generally quite low. So we actually see quite a few growth stocks in China actually are still priced for very good levels, even for value investors like us. So that's where our focus would be. And we do expect more policy actions coming up, but timing those would be very difficult, and we have these dramatic market swings in the meantime. So for us, we focus on the fundamentals and focus on finding those companies that can really deliver.
Yeah, and I see sort of some of them being, travel-related stocks in China, infrastructure in India. The other thing I wanted to ask about as COP29 is wrapping up at the moment, obviously there's a lot of disarray when it comes to national climate goals, but are there aspects when it comes to companies that you think, regardless of what the policies are going to be, that transition is already underway and it can't be rewound, that you still see opportunities in perhaps some of the renewable space or the solar space?
It's much less talked about these days with the Trump win, but I do still believe that for many of the regulators around the world, sustainability is still top of their mind. So for a lot of companies, we're still seeing positive developments, and while people haven't really been paying attention, China is trying to reduce the supply in the solar sector. We still need to see whether that would be effective, but I think in terms of policy direction and where they want the market to be, that is positive incrementally for the solar supply chain in China. And having said that, we've also seen very good performance of the grid exposure companies in the region as well, actually globally. So I think when we look at some of these fundamental development and fundamental shifts around the globe, while we pay attention to the U.S. presidential election, we actually do think that sustainability remains to be a very important theme that can really add alpha to investors' portfolios in the medium term. So from that perspective, we look for technology companies. We look for companies, again, that can grow their earnings with their respective country exposures and not really being impacted by, let's say, what's happening in the U.S. per se.
How much of those companies are here in Japan? I mean, we have seen some optimism, not only because of the Japanese yen continuing to weaken, but just corporate fundamentals starting to change. Right now, we're expecting Tokyo Gas to start trading, but we're hearing reports that Elliot has actually reported a major stake in Tokyo Gas, so you have more activist investors moving inside this country as well.
Absolutely. Japan is such a fertile ground for stock pickers to find those very good companies that are really, really poorly valued. So again, besides the sustainability angle, a lot of Japanese companies have underlying exposures to very exciting long-term themes. We were looking at also some companies that are cleaning PFAS for the water sources in different parts of the world. So there are many interesting specific exposures in Japan. So it's definitely worth digging into. And on the other side, in terms of activist investors, I think that trend remains to be very, very alive across Asia. In Korea, in Japan, and sometimes even for the Chinese SOEs, we're seeing that improving return on equity, improving shareholder returns remains to be a very important theme. So that's a self-help story across Asia-Pacific that we see that I think is very important for investors to notice and to look for those opportunities, because after all, after we talk about macro all day, it's about companies delivering on the earnings and improving returns. So those are very much alive, and we are very actively seeking and continuing to position for these opportunities in the portfolios.
Vicki, good to have you with us, Asian Equities Portfolio Manager at Robeco. We have more ahead on the Asia trade. This is Bloomberg.
The market has looked past a lot of the geopolitical risks.
A lot of these geopolitical headlines tend to be short-lived, and we would even argue offer up a pretty good entry point here.
As of now, at least, the reaction from markets is fairly modest.
You're seeing a bit of a shift here, but certainly nothing that's overly notable here, given the prospects for heightened geopolitical risk.
Geopolitics and politics is far more important for your strategic asset allocation than it is for tactical. Oftentimes, the way to actually trade politics and geopolitics is to fade the risks.
They're probably the biggest outstanding tail risk that is out there, but from an underwriting perspective, when we're thinking about investing, that's not our base case. It's not our core outlook.
Markets are still focused on the fundamentals unless we see a more meaningful escalation and or a more meaningful move in energy prices.
Bloomberg TV guests, they're weighing in on the escalation of Russia's war in Ukraine, its impact on markets. Well, the war has entered a new phase as Kyiv launches its first attack on Russian soil using US long-range missiles. At the same time, President Vladimir Putin has broadened guidelines on Russia's potential use of nuclear weapons. Bloomberg's Michael Heath joins us now for the latest. So we talked a little bit about, this is sort of perhaps not unexpected saber rattling. The temptation to escalate is obviously there. I guess the question is will he, and what does that look like?
Yeah, well, I mean, just coming back to Ukraine, the US has been very slow to allow Ukraine to do this. I mean, remember, it's in response to North Korea, basically Russia and North Korea agreeing that 10,000 North Korean troops would come across and help Russia fight in Ukraine because Russia's burned through so many of its own soldiers, with its very, very poor tactical, performance. So, it's not like that Ukraine is or the US is actually escalating this, but Russia always likes to, as some comedians have said, they sort of put out so many narratives just to try to confuse everyone as much as possible. But the underlying factor is that this has come in response to Ukraine doing that. And really it's the only ace Russia has up its sleeve in terms of dealing with the Biden administration and dealing with everyone else is this nuclear threat. I mean, it's a hugely heavily armed, nuclear nation. But by the same token, the people who run the Kremlin, Vladimir Putin and his KGB coterie, they're unlikely to do anything. I mean, just if we even want to hark back due to COVID, Putin would have officials sit down at the end of a huge table because he was so worried about catching a bug, let alone starting a nuclear war. So you have to treat these things with some degree of scepticism. And I think what they're saying, those market people, is quite right. That these sort of things, they come and go. And as the US said as well, it wasn't unexpected. We announce one thing, they respond with that, and that's how it's gone for the past 2 years.
It's interesting watching the level of disarray at G20, right? Some people wanting to talk about it, having that stronger language in the communique. The communique then was suddenly, declared as being complete without that mention. President Biden didn't talk about it. President Xi didn't talk about it. I mean, does that kind of indicate the lack of consensus or the lack of a way forward? Oh, yeah, definitely. I mean, look, at every international conference, they struggle with this communique, and the reason being that, I mean, it's on Brazil's part, it's reasonably mercenary that they just want to be able to get the advantage of Russian products and support and that sort of thing there. And Italy's Prime Minister said it pretty well. I mean, she said, look, we all know where this has started. Whatever anyone wants to do about watering down a statement or whatever, Russia is the heart of this kind of thing. But we do see that. With President Biden, it's sort of more understandable because he doesn't want to be talking about US weapons being fired into Russia. I mean, if you think about it just on paper, it sounds quite bad, even though realistically it's not. But with President Xi, there's no advantage to him in talking about it. I mean, a lot of the support Russia's getting is in ways through other countries is coming from China too, and he wants to be a statesman and a stabilising factor. But yes, the general thing seems to be with the G20 is that there's not a lot of point in committing too much now because we're waiting for an agent of change in Donald Trump to take over office, and he's talking about ending the war in Ukraine in a day. And obviously Ukraine and Russia are prepping for that too. That's why we have sort of entered this new phase and this escalation, is that they can see on the horizon that they're going to be forced to talk, and it's trying to gain or have leverage for those talks that they're sort of escalating as well.
Of course, Michael Heath there with the latest on those geopolitical stories. And we have more that we're following because the UN nuclear watchdog says Iran has agreed to stop enriching uranium to close to the levels needed for weapons. IAEA monitors say Iran's engineers are taking the first steps needed to cap output of 60% enriched fuel. It comes after talks in Tehran this month between the agency's director general and Iran's president. Bloomberg has learned that the Biden administration is beginning to refer to Edmundo Gonzalez as Venezuela's president-elect. A senior administration official says Secretary of State Antony Blinken told partners about the decision at the G20 summit. The move is designed to increase pressure on Nicolás Maduro, who says he won the July election without providing proof. Bloomberg has learned that the incoming Trump administration is looking to slash fuel efficiency requirements for new cars and light trucks. It's part of plans to unwind Biden policies the president-elect has blasted as an EV mandate. Sources say they're also targeting related EPA standards on tailpipe emissions. And Haidi, we're also starting to see the contours of the Trump 2.0 administration when it comes to some of those medical appointments. Donald Trump has nominated Dr. Oz to lead the Centers for Medicare and Medicaid Services. Now, this is an agency that manages $1.7 trillion in annual spending for federal programs, ensuring more than a third of Americans. And a lot of people, of course, are going to say this is a very unconventional pick. When it comes to more conventional picks, Trump is tapping Cantor Fitzgerald CEO Howard Lutnick to lead the Commerce Department. We know that he was one of Trump's most prominent Wall Street backers, and we've seen him sort of in this very public battle to head the Treasury Department. But we know at this point there's still no clear indication of who could become Treasury Secretary.
Yeah, and I suppose it removes one name, but there's certainly still a whole lot of other names in the hat, right? And, you know, increasingly we're seeing this kind of Treasury-sized hole in this cabinet. And I think market observers, perhaps that is reassuring because we know that this role is potentially the most important in the world when it comes to handling and managing the way through difficult economic and financial challenges atop the U.S. economy. And the market sort of consensus seems to support this idea that Kevin Warsh is a former Federal Reserve board member, well known to Wall Street. He's really kind of the street's peak in terms of who would be very well qualified and has won that backing in the bond market. So that new candidacy possibility through Warsh is sort of what markets have been contending with. And that could have been the big rally when it comes to the Treasury rally that we saw beginning at the start of the month there as well. So he is scheduled to meet with Warsh in the next day or two, according to people familiar with the matter. But there are still other names at play, right? Scott Bessent, Mark Rowan, the Tennessee Senator, Phil Hagerty were all still in contention. But Shery, watching one stock that is significant in the Tokyo session.
Yeah, 7 and 9 right now, gaining more than 8% at one point, really jumping more than 9%. And this is really on news from a local media outlet that a special purpose company has been established by the founding family of 7 and 9 and other parties, and they're working on a plan to conduct a takeover bid for the entire company, and they want to complete this deal by the end of this year. Of course, we've been watching 7 and 9 very closely, given, of course, Alimentation Couche-Tard is also wanting to get this company. We will be hearing more about the latest developments around this company. But we have more ahead on the Asia Trade. This is Bloomberg.
The former Hong Kong media mogul Jimmy Lai will take to the stand today to defend himself against national security charges in a case being closely watched in Beijing and the West. Lai hasn't spoken publicly in nearly 4 years after being detained under the China-imposed laws. Our China correspondent Min Min Lo joins us now from outside the West Kowloon Magistrates Court, where all of this will play out today. What are we watching for?
Yeah, Heidi, it's a very rainy morning here, and if we get the camera to pan over there, you can see there's a long line of people queuing by the side of this building, out with their umbrellas. Heavy police presence here managing the crowds. They're starting to allow people to slowly stream into the court building, and people are closely watching this because, as you said, it's the first time we get to hear from Jimmy Lai himself, the first time in 4 years after he was put into solitary confinement in December of 2020. He was arrested in August of 2020, but he was denied bail, and he's basically charged with two counts of colluding with foreign forces and 1 count of publishing seditious material. This is related to his role as the founder of Apple Daily, a pro-democracy newspaper that is now closed down. He is accused of advocating for international sanctions against Hong Kong and China, and also using the newspaper to get people to go out to protest against that 2019 proposed extradition bill. This hearing, the trial could go on for a few more weeks. It could even extend into next year.
What are we hearing from global leaders so far?
Yeah, well, this came hot on the heels of that mass sentencing yesterday of the 45 pro-democracy activists, and that had already drawn condemnation from the likes of the US and Australia. You have the British Prime Minister raising the issue of Jimmy Lai's deteriorating health with President Xi Jinping at the sidelines of the G20 summit in Brazil. And you have the European Parliament as well calling for the unconditional and immediate release of Jimmy Lai. And this case has also drawn criticism, questions around how fair the trial is, given that he was not granted a jury trial. He's being trialed by 3 judges handpicked by the judiciary. He was not allowed to use a lawyer of his choice because a top British lawyer, Timothy Owen, was barred from representing him, although the Hong Kong authorities have said that there is no question of impartiality around the judges. They have also denied that Lai is being mistreated in prison, saying that he had chosen to be in an isolated cell.
China correspondent Mimi Lo there joining us from Hong Kong. Here in Japan, we're watching Tokyo Gas in today's trading. This as the company is now surging more than 15% at one point. We heard that Elliot Investment Management has reported a major stake in Tokyo Gas, now holding more than 5% of the utility and could be making important proposals to the company. And this, of course, as we're seeing more activist investors take an interest here in Japan. This is Elliot's 4th investment in a Japanese firm this year, but the first time since 2019 that it's acquired more than 5%. Tokyo Gas gaining more than 11%. This is Bloomberg. Take a look at how Korean assets are trading at the moment. We're seeing Korean won gaining ground again for a 6th consecutive session. Of course, we have more weakness in the greenback right now. The Kospi holding steady, not a lot happening, although the tech-heavy Kosdaq is down 0.5%. When it comes to the Kospi financials, consumer discretionary are leading those gains, but again, tech is leading the declines. And you can see Korea Zinc right there is actually losing ground for a 3rd consecutive session. Now, this is the world's largest zinc smelter, and the CEO of Korean Zinc now saying that he's working hard to regain shareholders' trust after being forced to scrap a $1.8 billion share sale last week. Our chief North Asia correspondent Stephen Engel spoke exclusively with Yun-Beom about the steps he's taking to revive the firm that's seen crucial for limiting China's dominance in metals and renewables energy. Steve joins us now from Seoul. Steve, so what did you hear?
Yeah, in a wide-ranging interview that lasted more than 2 hours, we touched on everything, including, of course, this boardroom takeover battle, this hostile takeover bid, if you want to call it that, of Korea Zinc that is still playing out, was a large part of that interview. Of course, this is a saga that is capturing the attention of the entire boardrooms of Korea Incorporated because, you know, look, hostile takeover bids are not new to Korea. However, ones that are involving global private equity firms like this battle are new and could potentially shake up the way these chaebols are run and how much, of course, independence their board is and disclosure and the like. It could really shake things from the rafters. Essentially, it's been going on now for a couple of months, and the CEO and chairman, existing chairman right now, Yun Choi, is trying to rebuff that. He had a bit of a misstep. He said it was a mistake for a rights offer to try and build up capital to rebuff this takeover bid from the largest shareholder, really, within Korea Zinc, of co-founding family. That's the Yun-Beom Group, as well as MBK Partners. Now, Yun Choi has signed up with Bain Capital to fend off that bid. But again, it could culminate in an EGM at the end of this year, where investors will be able able to vote on which path forward. But it is hot and heavy right now, and Yun Che did say that he will improve corporate governance and he will increase the dividend, but he will continue to go ahead with his Troika plan, and that is to move into cleaner areas, including the materials that go into electric vehicle batteries. That was a big part of our discussion as well when we talked about the incoming Trump administration and what potential impact Donald Trump back in the White House, and whether he will continue with the Science and Chips Act, the IRA, and other areas where foreign companies like Korea Zinc have been very, very active. Here's my second bit of my interview, exclusive interview with the CEO of Korea Zinc, Yun Che.
I think it's obviously unclear as to how the Trump administration will change IRA, for example, or strengthen the definition of FEOC, foreign entity of concern. I think there are some things that we can be sure of, which is he will be tougher on China when it comes to importing goods that are produced by China or entity that is controlled by China in one way or the other. And without passing any sort of judgment on that trend, what we have tried to do with our nickel refinery with Chemco is to build. So we studied nickel market for a long time. Nickel market is a much smaller market than zinc market or copper market, lead market, but it is much more complicated than any of those markets in the context of the new geopolitical environment, where countries like U.S. or Europe can, if they are going out to the world and looking for nickel that is produced by non-Chinese party, they're going to have a very, very short list, and we're going to be on the top of that list.
Where do you stand right now as far as the concerns that have been expressed from Korea Zinc about MBK and what some would say maybe is the opaque nature of its capital base and whether it is tied to Chinese capital? They have denied it. I've heard back to September they've denied, because the concern, I guess, with the government would be that now that they've basically named, national core technology as the precursor process for zinc, does that help or hinder you? Because that would, I would assume, prevent such technologies in your assets to being bought by the Chinese.
So we're in the process of the technologies that just have been certified as a national core technology, I should say, are just tips of the iceberg. There are hundreds and hundreds of technologies within our organization that are integral to run the business as we do. And I think some of the important ones we will, again, apply for the national core technology certification in a near future. But I think, that's a good question. Whether or not this helps us or hinder us, I don't think it does either. I think it ensures that some of the technologies that Korean government finds nationally important for national security reasons and whatnot can partially be protected in the event of a sale to a foreign entity. But there are many ways in which technologies can be leaked out to an outer party.
But how much of a national security threat would a management change actually be? You're the biggest zinc smelter outside of China with about 12% of the market. Sulfuric acid also, which is key component to cleaning silicon wafers for the semiconductor industry. Antimony is another element.
Antimony is getting much more pricey these days, yes.
Really controlled, I think 64% of the market shipped out of China. They're trying to control that as well.
They've banned export. Recently, I think.
Yeah. So what happens if Korea Zinc falls into the hands of the Chinese?
Well, Chinese or Martians, I don't think it really matters for the purpose of our conversations. But I think it is extremely difficult for somebody else who do not share the religion to run the company as we do.
A fascinating conversation with Yun Che. Of course, he is the CEO of Korea Zinc. He'll be the outgoing board chairman. He has promised to bring in an outside independent foreign board chairman to increase, of course, transparency and corporate governance, something that investors have been clamoring for. It's something as well that the consortium, if you will, of Yun-Beom as well as MBK have been calling for more corporate governance at Korea Zinc. But it's a bigger issue, of course, as you all know, in corporate Korea, essentially, transparency in these largely family-run chaebols. Yun Che is a third-generation, CEO of this company. It was co-founded by his grandfather, who looms large in the headquarters here in Seoul. Back to you guys.
Our Chief North Asia correspondent Stephen Engel there in Seoul. And let's take a look at some of the corporate stories we're following out of Japan. Nihon Bank is warning that its annual loss may exceed a previous $9.7 billion projection as it steps up the disposal of unprofitable foreign bonds. The Japanese lender wants to offload around $64 billion worth of US and EU government debt this fiscal year. It's trying to stem losses from wrong-way bets on rates. Elliot Management has reported a major stake in Tokyo Gas, the latest example of activist investors trying to unlock hidden value in Japanese firms. The fund now holds more than 5% of the utility. It is Elliot's fourth investment in a Japanese firm this year, but the first time since 2019 that it's acquired a level that requires public disclosure, Shery.
And Haidi, you can see Tokyo Gas right now gaining more than 10%, trading at a record high. Also at a record high, Kadokawa. Now, a Sony Group is exploring a takeover of this Japanese publisher, potentially expanding its content portfolio, according to people speaking to Bloomberg. This will also tighten Sony's grip over the maker of the hit role-playing game Elden Ring. You can see Sony gaining almost 4%. And Seven & I also at a record high. We have heard from Japanese broadcaster NHK that the founding family of Seven & I is looking to complete a deal to take the company private by the end of this year. Now, this will be through a special purpose company. They want to plan a takeover bid for the entire firm, and they're looking to raise more than 8 trillion yen. That's about $52 billion. And of course, this coming at a time when Alimentation Couche-Tard is also going after the firm. We have more ahead on the Asia Trade. This is Bloomberg.
Well, SpaceX says its Starship has achieved new goals during its 6th major test launch, but the company did scrap plans to catch the booster with the mechanical arms. The Super Heavy rocket performed a controlled landing in the ocean. The Starship capsule survived re-entry into the Earth's atmosphere. US President-elect Donald Trump was at the launch alongside SpaceX CEO Elon Musk. Staying with the business of space, and French company Arianespace says it's targeting early next year for the first commercial flight of its Ariane 6 heavy lift rocket. Let's discuss the company's business, the growth outlook with the CEO, Stephane, who joins us now exclusively in the Sydney studio. Great to see you again. I can't believe it's been almost 2 years. I wanted to talk a little bit about the progress that's been made and what's sort of coming up. But first of all, why Australia? Why are you here?
Yes, I'm here because we happen to work a lot for Australia. We have made 8 successful launches for Australia since 1987 for Optus. So we have made 6 launches for Optus, 2 for the NBN project, and we have 1 more satellite in our order book, which is called Optus 11. So Australia is super important for us.
Yeah, and there has been a lot of excitement domestically, right? We've got the final approval for Gilmore finally. Southern Launch is making progress as well. Are those facilities in Australia something that Arianespace would use?
First, our mother company, Ariane Group is a mother company of Arianespace. Ariane Group is delivering critical elements to the rocket of Adam Gilmour. So we know very well Gilmour, and we are very happy to support him. And we wish him the best for his launch, which should happen by the end of the year. Regarding the spaceport, you have some French companies who are working with the Australian spaceport. There is a startup called Sirius. But for Ariane, our spaceport is located in French Guiana, in Amazonia. It's very heavy investment, and so we do not project to use Australia as a spaceport.
So the second mission, I should say, for Ariane 6 was supposed to be by the end of this year. That's been pushed back to the first quarter. Can you talk us through some of the, I guess, challenges and why you see this kind of delay?
So we have made the successful launch of Ariane 6 on July 9, and it was a big success. The launch was very well, and it has allowed us to prepare the second launch. Now we are in the preparation of the second launch.
Do you have a date for the second launch?
So what we have said is it will be first quarter. The soonest possible would be mid-February, and it should not be after the end of March, so let's say February, March. And we are just now preparing the second launch. You know, we have had a limited period of time between the inaugural flight and the second launch. All is nominal. The rocket is now being transported from France to French Guiana. We are fixing all the data of the inaugural flight, and so we should be ready, let's say, end February, something like that.
What are the biggest challenges in leading up to this launch, and what do you see ahead for the rest of the year?
So no, the challenge is just to prepare the rocket, to fix all the data linked to the inaugural flight. We are also preparing the launch pad, but again, everything is under control, and this is why we have now this window for the launch. And after, we are preparing with our other customer the coming launches. Next year, it will be a super exciting year because we will launch the first mission we are going to deliver for Kuiper. Kuiper is a constellation of Amazon. We will have also super important launches to deliver for European institutional agencies. So second launch will be mid-February, end of March, and after we are fixing the coming launches with our customers, and among them there will be Amazon for the Kuiper project.
When it comes to the business proposition of your services, how competitive is your pricing?
So Ariane 6 is a competitive rocket, and to show why it is a competitive rocket, we have in our order book 30 missions, and the majority of our missions are for the commercial market. We have signed this contract with Amazon in 2022 for 18 dedicated Ariane 6. We have the American operator Intelsat in our order book, the European operator Eutelsat, and we have Optus, the Australian operator, who has been one of the first to sign with us for Optus 11. So this is why we are competitive.
We were just watching some of the images, obviously, from the SpaceX launch this morning, and I don't want you to necessarily comment on another company, but broadly there is that gap that's widening between US companies and what European companies like yours have been able to do. Are you optimistic that that gap can be closed, and what do you think is the biggest drag on being able to move more quickly?
No, I think it's important to understand that the models are not the same. You know, SpaceX is manufacturing its own satellite, launching its own satellite, operating them through the Starlink constellation.
So vertical integration is obviously a strength.
It's what we call vertical integration. In Arianespace, we are a rocket company, so we do not manufacture satellites, we do not operate satellites. So this is the first difference. The second difference, you know, when you see a Starship, we do not need in Europe a super heavy launcher because we do not want to transport men to Moon or to Mars. It's not our primary goal. So the models are different. What is important for us is to make Ariane 6 a success. Commercially speaking, it is already a success, and now we must deliver from an industrial standpoint on the launch pad. We must be successful for our ramp up. We will make on average 10 launches per year, and we must be focused on that and not to, this is really our primary goal. And you know, I don't think it makes sense to always say SpaceX. They are doing great things, and congratulations for that. But what is important for us is to be successful with Ariane 6.
How much engagement have you had from the Australian government? Has that been helpful? Do you think more governments, either on the European side or here in Australia, could do more?
You know, the Australian government has an ambitious space program. It's called the GP9102. They have announced last week that they are going to reshuffle this program, and they have said something super important. They have said we want to go for a multi-orbit strategy. It means that for their sovereign needs, they will need low Earth orbit, medium Earth orbit, and GTO orbit. And the good news is that Ariane 6 is perfectly competitive for these three orbits. So depending on the needs of the governments, we can fulfill them. But it's now the responsibility of Australia to precise how they want to reset the GP9102 program, and we are here.
Stephane, great to have you here again, and best of luck for that first quarter second mission for the Ariane 6. Stephane Israel, he's the CEO of Arianespace, joining us exclusively here in Sydney. You can watch us live and catch up on some of those past conversations in our interactive TV function. That's at TV Go. You can dive into any of the securities or the functions that we talk about and become part of the conversation as well. You can send us messages during our shows. This is for Bloomberg subscribers only. Do check it out. It's at TV Go. This is Bloomberg. Take a look at some of the haven assets that we're tracking. Of course, we have seen that sort of strong outperformance, particularly when it comes to treasuries, less so when it comes to the US dollar, but more benefiting the likes of the yen and the Aussie, all in light of course, these increasing geopolitical developments. President Biden approving anti-personnel landmine supply to be used in Ukraine. That's according to the latest reporting in the Washington Post. And this comes, of course, as we see markets continuing to react to the first US missiles being used in Russia by Ukraine after the approval from the United States. We're now hearing that President Biden has authorized a provision of anti-personnel landmines, I should say, to Ukraine, according to two US officials and reporting in the Washington Post. This as we see incremental steps to try and bolster Kyiv's defenses against advancing Russian troops, but has drawn, of course, criticism from a number of arms control groups as well. And we continue to see some of those gains being held in gold, for example, but sort of less so of that reaction in the US dollar.
Right, Haidi, and we turn to a big report from Bloomberg Intelligence. Our team is seeing opportunities in property markets across the Asia-Pacific. This, as we're seeing central banks now cutting rates. Senior analyst Patrick Wong joins us for more on today's deep dive report. So what's a major trend, especially when it comes to capital flows for real estate investments in Asia-Pacific that you're seeing right now?
For us, we have the deep dive report published today, and the basic here is that we observe the trend change quite a bit, especially for China market. In the past, we have lots of capital inflow into China, and now it's have a bit of changes. Especially, we see the more info is mainly from Hong Kong and Singapore going into China, but other than that, the other markets overseas, they're more cautious about China. So that's why we also observe the opportunities in the Asia-Pac is mainly for some of the market like Australia, Japan, and also we see Hong Kong and Singapore is also going to be a bit more resilient into also getting more info into those markets going to 2025.
China's rolled out, of course, a number of new easing measures since September. How does this potentially play out for the outlook in 2025? Because, of course, so far it's been, it hasn't made a meaningful difference when it comes to this really drawing down supply.
Yes, we see the situation for now is for mainland China. The challenge for now is that the crisis prolonged quite a bit. Even we have the easing measures happening since September and support the market recovery. The challenge right now is that we also see the structural issues still remain unchanged. Especially we have lots of unsold units still there for those completed projects. And then another issue is that we also have lots of projects already sold but still not yet completed. And that's also affect the concerns from lots of the potential buyers because they already acquired the units but they didn't get the units ready for delivery to them. So, but they still paying the mortgage. So that is the prolonged crisis happening in mainland China and then affecting the concerns of lots of the potential buyers. So that's why this is also impacting on the overall recovery will drag on for a longer period of time over the next couple of years in mainland China.
Prolonged crisis also in Hong Kong. Home prices hitting, what, an 8-year low or so? When can we expect prices to recover?
Yes, the market for Hong Kong is also quite tricky because we observed a 30% drop from 2021 to now. So it's already quite a lot. And the potential possibility going to 2025 is that we see the interest rate may going down a little bit further. And then the rental yield also went up a lot in Hong Kong for the housing market. So for the residential market, we see the potential opportunities happening for the overall mass residential or even the luxury residential. The market is also turning a bit around in terms of getting more potential buyers coming into Hong Kong. That when the interest rate is going down further. So there is a potential opportunities happening to Hong Kong housing market. And versus the commercial market, still a bit challenging. We see the rent still coming down in Hong Kong, and then the vacancy rate also still at record high. So that is also affecting the office.
Bloomberg Intelligence APAC real estate senior analyst Patrick Wong there joining us. Take a look at how we're setting up when it comes to the future session as we head into the start of trading across Greater China. A bit of a mixed picture there, but certainly when it comes to the reluctance of another bounce for China's risk assets, we're really struggling to see that reprisal of what we saw in the post-stimulus enthusiasm of October. TAIEX futures looking pretty positive as we await, of course, the key numbers out of NVIDIA. This is Bloomberg.